The following is a presentation of TFNN. Nine Before 9 with John Logan. 9 minutes on the stock markets before 9 a.m. every trading day. Call now, toll free, 877-927-6648, or internationally, 727-445-1044. Now, John Logan.
Hi guys, welcome back. Let's try to hit it hard here. Looking at crude oil first. Try to cover some bases before you guys get going here on the market opening. Got a new profile here. This is the got that mislabeled there. This is our daily on crude. Poking its head finally above 49.35. So talked about a really good way to trade oil right now was to drill down into the sector. Talked about this yesterday and try to find some little dandies that have been holding up during this latest slide in oil. But right now the crude situation kind of poked its head above 49.35 on the daily. That could be used as a little bit of a support to possibly move higher. But the more attractive trades, just a little bit of a risky trade right there. Looking at June gold, this one, decent little bounce coming off that 1260.40. I think we're slow at 1260.70. Bouncing up a little bit there. This is still one of my favorite trades on the books right now. Taking a look at the dollar, we talked about this continuing to slide down. We do have a new profile, kind of like crude here, but really don't like this action right now. It looks like a continuation down, and we've crossed the border of the POC on a pretty wide profile on the dollar here. As you can see, that's the top of the mountain, and looks like we might retrace back up into that area to kind of sell off again. So not exactly excited about being short commodities in general right now, especially gold, which may reprice itself a lot higher. The 10-year kind of broke my heart a little bit, especially this morning. I thought we were going to possibly edge higher, and it was able to kind of get in the water, get back in the world on the long side above 125.20. Didn't really get a close exactly one way or the other yesterday. Pretty much closed right on the inflection point. But right now, that's kind of a stake in the ground for me to stay away from the 10-year. Just take the medicine and keep moving forward with some other instruments. Silver, on the other hand, relative to gold, looking at the weekly here, this is just, we talked about what's the easier trade, what's the higher probability trade to play around with gold relative to silver on the long side. This is exactly the reasons why here. This thing has just gotten its head handed to it lately, and that gold trade just looks extremely attractive. Let's take a look at a couple of ETFs. We talked yesterday, in fact, about possible sell point on the waiting for us to go back and retrace back up into 24.11 on the XLF. This is the financial sector, and a nice little trading opportunity there it offered. We're going to take a look at the XLU, which is just insane. I mean, really, really cool here. This is the weekly on the XLU. Been a big fan of just trying to stay long this and using lately this 51.64 to move higher. It's not a super exciting trade, but sometimes good trades are boring trades. Amazon, you guys know what the drill is here. They said something good. Here's the weekly on Amazon. Here's the daily. Let's just look at this. I want you to look back in time and see how these inflection points kind of work very well, especially for Amazon, and completing the cycle, breakout, big wide profile. Got to pay attention to the POC. We've reached our targets up top again now, but things on their highs go higher, especially when it comes to Amazon. So not interested whatsoever in ever shorting this stock. Buy the lottery tickets on the puts down below, but just don't, this is playing with fire on the short side on Amazon. You guys know that. Let's take a look at the 10-year, the 30-year, kind of a similar situation as a 10-year. This is a 30-year continuous. Met resistance, never really got a stake in the ground above, and henceforth sold off. Let's take a look at we're going to take a look at this copper trade one more time. So looking pretty attractive here on copper, getting back above 2.577. Still like this trade. If I get stopped out, I get stopped out. I just think, the dollar's heading south, copper, default go north, and then you've got some economic conditions that should lend credence to copper going up also. Let's take a look at the NASDAQ really quick. We reached that 6,000 and backed off on the, this is the NASDAQ futures on that index. And what do you do with the NASDAQ? I still don't think you got any reasons whatsoever to try to short this index. Here's the daily on the NASDAQ futures. Here's the 240s, got a profile appearing above or below price action. That's bullish in general. Let's take a look at a couple other stocks here I wanted to point out. IBM. So again, just the week of the stock market right now, and I've been a huge fan of trying to short this when it's possible, but retracement breakdown. You got another lever here, 160.81 on IBM. They've just completely missed the ride. There's no doubt about that, and they're going to be kind of shuffling around some concepts and ideas, and probably some numbers more to come on the downside. Let's take a look at a couple other things we need to look at before the opening here. China. We met our targets the other day, kind of holding above a really thin profile on the weekly here, above 34.24. I think the S&Ps are going to goose it one more time up top. Breadth calculations are positive. I think China's probably some of those A-share long ETFs are still not a bad predicament to be in. November beans. We're going to hit this really quick here. Back down to support, completely down in support again at 950.5. You don't want to see these things kind of revisit these lows. And here's the daily, just to let you know what's happened the past couple of days. It looks like we're wanting to do a little bit of a plunge here. So getting below 950.5, we might see some more lows here on November beans. I think we've kind of done what we wanted to do in this trading range, and it looks like we're going to take another leg lower. East corn, we're going to hit that really quick. It's for you grain traders. A little bit different scenario. 397, 380 is going to be support for this, but the whole grain complex could get dragged down, so beware of that today. And I think Larry's going to be back with us, if I'm not mistaken, at the 9 o'clock slot. Basil filled in for him yesterday. It was awesome. Just wanted to alert you there. And we're going to take a look at the S&Ps. The breadth calculations are so strong, and we're so, on the top recent highs here. Friday's close above this is going to be super detrimental to shorts. But again, I'm still blocking out the short side on the S&Ps here. No reason to try to be a cowboy or hero and try to short against that weekly unfair high right now. Guys, thanks. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.